Welcome everyone to the CFO Swinger Watch Report's technical analysis video for the week of October 14th through 18th. Now, last week was an absolutely amazing trading week as our two previous swing trade ideas, ticker symbols CART and UPST, were great successes. Now, in order for us to continue this streak of wins, we need to see the overall benchmark market or the S&P 500 ETF showing continuous bullish momentum, bullish price action, and just overall bullish sentiment. And in fact, all of last week, or mostly last week, we saw a combination of all three of those factors. And that is the number one reason why we saw continuous new all-time highs being hit last week. And at the same time, we continue to hold new intraday all-time high levels that we made in this current no man's land that we closed at last Friday. And so I love the fact that last Friday specifically, we made a high of the day and a new all-time high price print right over that whole number level of $580, or specifically $580.33. Now, I would not be surprised if we continue to make new all-time highs this week, even if we see low volume. Now, what I'm seeing personally throughout social media is that people are getting very worried and very skeptical on the markets being able to continuously run up into new all-time highs because of the lowering daily volume, and obviously, and most importantly, the lowering of the average daily volume that you guys can clearly see here after we peaked around August, right? And so after months of price action that obviously have shown us great bullishness by showing us higher highs and higher lows, this lowering of the average daily volume can be concerning. However, you guys need to remember that adage, this very, very common statement that we tend to say: a low volume melt up. Now, a lot of people are also skeptical about that because of the fact that they're worried about the current environment and just the overall, economic sentiment that we're seeing right now amongst investors and consumers. And so again, this combination of the market environment and economic data, and even just specifically labor market data, people aren't feeling too good, all the while the markets continue to make new all-time highs. And so in order to really focus on where the market is going, we need to take out all of that noise, even if we want to pay attention to the data and just focus on what the markets are actually telling us. And so this week, we should be seeing new all-time high price prints coming in as often as possible in order for us to see those continuous wins that we've seen so far from last trading week and even the last few trading weeks. And even if we do see a pullback, especially after this week's OPEX on Friday, I expect the price to come back down and retest these two significant levels. Now, I've highlighted these two levels last week because I was also thinking that we can't possibly just simply move sideways as we head into the big major catalyst of November's presidential elections. And so if we do come back down to retest the 563.50 previous all-time high level and the current 574.50 all-time high level, which is now a current support level, I'm going to expect to see buyers and sellers beginning to range trade the price in between these very two significant levels. Obviously, if we come back down and if we decide to break over just like how this price path structure shows, then we can continue to be very bullish. But on the other hand, if we simply break below $563.50 and we continue to see increasing selling volume, then we'll be a bit more bearish and cautious to any long positions that we're trying to get. Now, obviously that is in the near-term future, but not in the immediate future for our current trading plans. And so, for now, as I've said a couple minutes ago, make sure you guys understand why we should be seeing continuous new all-time highs while seeing lower and lower volume. All right. And so for me, a personal target that I have, just a very subjective target that I have for the S&P 500 will be 585. Just a simple whole number level since we have hit a new all-time high price print of $580.33. So slightly over, or 33 cents over that $580 whole number level. Okay, and with that, let's take a look at IWM. All right, so IWM has had a very, very good hold over the daily 50 SMA, which I've mentioned a couple of times last week in the CFO Discord. And on Thursday of last week, I also mentioned this specifically that if the Russell 2000 decides to hold this daily 50 SMA and pivot away from it and close at highs, then there's a good chance that we could be seeing some very bullish price action in the Russell 2000 and other lagging market caps like the mid-cap group, right? So on Friday, that's exactly what we saw as we're potentially seeing all these lagging market caps like the small caps and mid caps front running into a possible rate cut in November's FOMC meeting. And so I specifically talked about this. I briefly went over it in the market summary of this week's CFO Swinger Watch Report. So make sure you guys read that first. And so for IWM, again, nothing has changed. I just want to give you guys a quick update as to where the current price action is at and what it's currently showing us. And so far, based on this very nice bullish candlestick, it's a very large bullish candlestick with a close fairly close in proximity to the high of the day. There is a good chance that we can see a continuation of this move to the upside on IWM, and possibly we can finally see a retest of this $226.50 resistance level, which was also a previous first target, major target that we had back when we had that major reversal and breakout in mid-July. Okay, but then again, none of my future price targets or profit targets for IWM have changed. So again, 226.50, 233, and eventually an end of the year target of 240. All right, with that, let's take a look at this week's CFO Swinger Watch swing trade ideas. BILL or BILL. So this one is a bit tricky because, well, this is a stock that I would usually not take a look at for any type of long-term investments. However, there is a potential mean reversion trade that can do well for us for a couple of weeks or maybe even for a couple of months. So let's dissect this weekly time frame chart together. So first of all, we clearly see an inverted head and shoulders chart pattern, and during this inverted head and shoulders chart pattern, we have been making a very nice base as well, with a major level of support at $50 and a major level of resistance at $57. And at the same time, if we take a look at my weekly 10 SMA, this red line, and my weekly 21 SMA, this light blue line, we have had our first bullish crossover of the daily 10 SMA curling over the daily 21 SMA, and this has not occurred ever since the price broke below both of my weekly 10 and 21 SMAs back in September of 2022. 3. And in fact, we also had a previous weekly crossover, a bullish SMA crossover of the weekly 10 and weekly 21 SMAs back in late May of 2023. And so it's been a long time. It's been over a year since we have seen this bullish SMA crossover on the weekly time frame. And so as long as we see the SMAs curling up higher, especially the weekly 10 and 21 SMAs, we should be seeing continuous buying support as the price continues to go up higher, and eventually that buying and bullish volume coming in should eventually allow the price to break over $57 and eventually reach and retest this currently falling and declining weekly 50 SMA. Okay, and so that is the reason why our long entry point is over $57.10, and that's the reason why our first profit target is going to be $60, giving us a 1-to-3 risk to reward ratio. Now, I've given you guys the other major profit target levels to be looking at in the report itself, so make sure you guys go back to that. Now, if I go on the daily time frame now, there isn't much to look at here since we're looking at the same chart patterns here, a very nice range between 50 to 57, and obviously the inverted head and shoulders chart pattern. And so as long as we're able to continuously see the price moving sideways and completing the inverted right shoulder on this overall inverted head and shoulders chart pattern, we should be seeing a very nice breakout over $57. Okay, now before I move on to the second swing trade idea for this week, I want to take a look at the quarterly time frame or the 3-month time frame, because after such a major rocket up move higher to the top and then hitting a peak and then falling right back down from the stratosphere all the way back down to earth, we have been seeing a potential reversal about to occur here, because we have here a very nice doji candlestick in July. Right, this is the previous quarter's candlestick right here that began in July. And so with this quarter 3 candlestick, there is a good chance that in this current quarter we can see a confirmation of this very nice doji candlestick around this very nice demand area. Or if you take a look all the way in the past here during its IPO back in 2019, we're practically right above the IPO highs. And so it seems like the longer term investors and buyers are trying to hold the price at least above the highs of the IPO days, the very early trading days. And so as long as we continue to see that buying coming in, we should be able to break over the previous quarter's high sitting at $56.76 and potentially have a very nice fat bullish candlestick to the upside with a very wide range to end this quarter and end this year. Okay. All right. And so that leads us into our second and last swing trade idea for this week, which is SOUN, Soundhound. Now, I want to take a look at this on the weekly time frame, because look at how beautiful this consolidation is, right? I mean, after having this very impulsive short squeeze to the upside back in February of this year, ever since then, we have continued to tighten up in a very constructive manner on a very highly shorted stock. And so, as I've stated in the report itself, we're also looking at this name as an AI play because it is an AI name, right? And from the past week or so, we have been seeing a lot of software companies that are involved with this current AI revolution that we're seeing starting to move back up higher after they've been lagging for a couple of weeks or even months. And so with a name that is highly shorted, there's a good chance just like UPST last week, we could be seeing an explosive breakout to the upside. And so what we're currently seeing now is the price making a very tight range, and during that consolidation, we have made a very nice wedge chart pattern. It's not your usual conventional textbook wedge chart pattern, but nonetheless, there's an overall consolidation that we've been seeing after hitting that peak back in mid-March, after that enormous run up since February. We have been getting tighter and tighter and tighter, and now we're at this convergence point of this wedge chart pattern, as we are now tightly staying underneath a major weekly resistance level right at $5. And at the same time, we're seeing my weekly 10 and weekly 21 SMAs coiling and coiling and coiling, and eventually this coiling will unwind as the price breaks out to the upside, and we will see the weekly 10 and weekly 21 SMAs curling up higher and slowly distancing themselves from each other as the price continuously moves up higher. And that's what I mean when my SMAs will uncoil, right? They're going to start to distance themselves from each other as the price continuously moves up higher. And obviously right now they're coiling with each other as they continuously cross under and over each other. And so for this specific stock, it is a very, very high risk stock to trade, since there can be a lot of fake outs from a very highly shorted name here and a very high short interest percentage. And so I want you guys to be very cautious and be very, very aware of where your stops should be. But that is the reason why I want to take a look at this name with a long entry point over last week's highs, which is currently sitting at $5.04, which is the reason why our long entry point will be over $5.10 for that extra confirmation. Just 6 cents difference, but it will give us that confirmation. And so once we're able to break over the horizontal level of $5 and eventually over this descending resistance trendline that makes up the overall wedge chart pattern, or as people like to say, a symmetrical triangle chart pattern, then we should be able to see a revisit of at least the previous highs here around $5.50, which is also a whole number level here. Or we can be looking at a retest of the whole number level of $6. But since we're trying to make a specific level to be our profit target here, I want to be looking at $5.80. Now, you guys might be thinking that that might be a very, very small profit target from our current entry point here, over $5.10. But if you take a look at it from a percentage standpoint, okay, right, that is over 13% in gains. And so hopefully you guys can see that even just a quote-unquote small move to $5.80 from $5.10 can yield some very, very good results for this long position. Now, I do have some other more speculative profit targets or price targets for this swing trade idea, so make sure you guys go back to the report and read the entire analysis. All right, with that is it for this week's technical analysis video. If you guys liked what you heard, make sure you guys smash that like button down below. And if you guys are new here, welcome. Make sure you guys hit that subscribe button down below. But on top of that, make sure you guys hit that notification bell as well to know when I am live on Tuesdays and Thursdays and when I have uploaded a new video just like this one. Have a great rest of your night and good luck tomorrow.